For more on this, we're joined by Nadia Elbilassy. She's Senior Market Analyst at Equiti Group. Welcome back to the programme, Nadia. Now, we're seeing a fourth straight session of losses in Asia. What's reversed the recent tech rally? Is the AI boom no longer cushioning the fallout from the war?
Good morning, Taiba. And there's a few things here. First, it's the macro fundamentals that have been supporting the AI optimism and the AI trends that are no longer with us today. So, for example, we have a state of higher for longer instead of four rate cuts that we were expecting in the beginning of the year. We also have the Samsung Union thing going on in Korea. We also have the issuing of debt. We have higher bond yields. So all these things are playing a major role into weighing on tech stocks, especially the higher for longer.
Right, and US bond yields have hit their highest level since the 2007 financial crisis. What's driving this major sell-off?
So we obviously have geopolitical concerns. We have oil prices rising rapidly, where WTI and Brent are both above the 100 per barrel mark. So all these things are also contributing to the rise of yields, and also the issuing of debt for the US to cover its deficits. This is a major also player why we're seeing rising debts. But overall, it's the uncertainty of a lot of things: AI valuations, interest rates, and geopolitical uncertainties, especially this week.
Yes, and we've also seen gold and silver come under pressure as these geopolitical tensions rise. What's behind the breakdown of the usual safe haven trade?
We're focusing now on the dollar as a safe haven. This trend has been going on since the beginning of the war, since the war broke out, especially with higher oil prices, higher inflation risks, and stagflation, the current situation that we're seeing right now. All these uncertainties are placing the dollar at the front and center instead of gold prices, because gold prices were definitely rising last year and at the beginning of the year, just because we were expected to see rate cuts. But now that this is let's say, presumably could happen at the end of the year instead of recently, just because of higher inflation prices for longer. This is also impacting why the dollar is at the front and center and not gold.
And Nvidia earnings are due out later in the day. What are markets pricing in, and what broader impact can we potentially see in the AI sector?
So speculations over how AI valuations were actually going to be set up, this is what's weighing on investor sentiment, especially on the AI trade. Valuations and profit margins have been going on since last year, the Q4. So I think nothing really will change here, but I think definitely a stronger set of earnings that we expect. And we're also looking for what's next, because we will be looking at gross margins, the valuations, all the money that has been spent. I think this is what's really going to impact markets, which is the forward guidance. But I do think that AI has intercepted our reality so much that we could actually see the microchip semiconductor today.
And let's take a quick look at oil prices. They still remain elevated at above $110 a barrel. How are energy markets reacting at the moment to the current geopolitical updates?
So this week has been crucial just because we know that ongoing discussions have been going on between Trump and Iran. But I think several factors are impacting these negotiations, especially the closure of the Strait of Hormuz. Other nearby countries also getting involved in this war. So all in all, it's impacting oil prices. And this is why the further that this goes on, the more that we're going to see a rise in oil prices. I think this is kind of the geopolitical premium risk that we're seeing in the markets right now. So I do think that we still have capacity to rise further, unless obviously they do close negotiations and discussions today or tomorrow and do actually open the Strait of Hormuz and the war has ended.
Nadia, we'll leave it there for now. Nadia Elbilassy in Dubai, thank you very much for your analysis.
Thank you, Taib.